Welcome to China Connect. We're your laugh-out-loud passport to China's best. Explore and let's discover China now, with a giggle. In today's episode, we're going to dive deep into the latest news and analysis regarding China's manufacturing industry and what it means for both the domestic and global economy. So, grab your favorite beverage, sit back, relax, and let's get started. Now, if you've been following the state of China's manufacturing sector, you'll be happy to know that the Manufacturing Purchasing Managers Index, PMI, experienced a slight rebound last month, coming in at 49%. This is up 0.2 percentage points from May's lowest point, so things are looking a bit better. However, it's essential to keep in mind that the PMI is still in the contraction range, below the 50% prosperity line, marking the third consecutive month in this territory. What does this mean, you ask? Well, it indicates that manufacturing production and operating activities have seen marginal improvement, but there's still a long way to go. Experts have analyzed the current economic operation and found that it has stabilized to some extent, with manufacturing supply resuming expansion and demand improving marginally. But it's not all sunshine and rainbows, folks. Employment pressure is increasing, corporate confidence continues to decline, and more than 60% of companies are reporting insufficient market demand. The PMI of small enterprises is experiencing accelerated contraction, which means that the pressure on the private economy continues to increase. As a result, the top priority for China's economic policymakers is to reverse expectations and stabilize confidence. To achieve this, we can expect the introduction of various policy measures aimed at stabilizing the economy in the coming months. Now, let's take a closer look at the data breakdown. In June, the non-manufacturing business activity index fell 1.3 percentage points to 53.2%, remaining within the expansion range so far this year. However, the composite PMI output index declined by 0.6 percentage points to 52.3%, indicating that corporate production and operations are still expanding, but the momentum is slowing down. As we examine the sub-indexes, we can see that the production index rose 0.7 percentage points to 50.3%, returning to the expansion range. Additionally, the new order index, which had been declining continuously since March, increased by 0.3 percentage points to 48.6%. This suggests that manufacturing production activity is accelerating, and demand is improving marginally. However, the global economy remains weak, causing the new export order index in June to fall by 0.8 percentage points to 46.4%, remaining in contraction for 3 consecutive months. In terms of employment, the index continued its decline for 4 consecutive months below the critical point. The raw material price and ex-factory price indexes also rose in the contraction range. Meanwhile, the manufacturing production and operation expectation index hit its lowest point this year at 53.4%, reflecting a decline in optimism among companies about the industry's outlook. The PMIs of large, medium, and small enterprises show differentiated trends, with large enterprises returning to the expansion range. Medium-sized enterprises experiencing a slight rise in the contraction range, and small enterprises seeing accelerated contraction. Zhang Likun, a researcher at the Macro Department of the Development Research Center of the State Council and an associate analyst at the China Federation of Logistics and Purchasing, pointed out that the slight increase in the June PMI index shows that the foundation for economic recovery is constantly consolidating. The production index, new order index, and ex-factory price index all rose, with other indexes showing a significantly narrowed decline, indicating a bottoming rebound trend in overall manufacturing production and operations. However, the pressure on demand contraction remains prominent. The PMI order indexes are all below the prosperity line, reflecting that the proportion of companies with insufficient demand rose from 58% in May to 61% in June, hitting a new record high again. Zhang Likun believes that the current moment is the most urgent time to reverse the contraction in demand. It depends on the continued warming of the super-large domestic market to drive the continued recovery of corporate production and operations and promote sustained economic recovery. Wen Tao, an analyst at the China Logistics Information Center, also pointed out that the current economy needs to focus on two major issues. First, enterprises still feel a stronger sense of insufficient market demand, especially the continued contraction of exports, which is an important factor leading to insufficient demand. Second, the supply and demand of small enterprises are accelerating contraction. Private economy is the main body of small enterprises. The slowdown in the operation of small enterprises indicates that the pressure on private economy continues to increase. The June PMI rebounded slightly, but the overall and most sub-indexes have contracted for 3 consecutive months, indicating that the economic boom is still low, said Xiong Yuan, chief economist of Guosheng Securities. Xiong elaborated that with weak endogenous power, insufficient demand, and lack of confidence, downward pressure on the economy might be greater in the second half of the year. Xiong Yuan predicts that several policies will be introduced in succession to boost confidence and stabilize the economy. On June 30th, the People's Bank of China announced an increase of 200 billion yuan in the quota of relending to agriculture, small and micro businesses, and rediscount. The move aims to provide financial support to these sectors, reduce the cost of social financing, promote employment expansion, and support the recovery of endogenous power in the economy. So, what does all this mean for you, my dear China Connect fans and followers? Well, it's a mixed bag. The manufacturing industry is showing signs of stabilization, but there's still a lot of work to be done to keep the economy on track. Keep an eye on those policy combinations that are expected to be introduced soon. They might just be the key to reversing expectations and stabilizing confidence in the private economy. Thanks for exploring China with us. Hit like, comment, and share for laughs. Subscribe and drop your thoughts below. Let's keep showcasing this amazing nation. See you in the next funny video.